Hey, everybody. Welcome back to the show. Like I said in the introduction, I am sitting down with return guests, Asher Genoot and Sue Ennis, and we are going to have a really, really awesome episode where we've got some still pretty hot off the press news about the merger being complete and the new entity, NewHut. Asher, Sue, welcome to the show.
Hey, great to be here. Pumped to talk to your audience again. Lots going on at Hut.
Thanks so much for having us. Super excited to have this conversation.
Absolutely. Like I said, just still very fresh, hot off the press. Just last week with the big news. Congratulations, guys. Getting this merger across the finish line was not a small feat by any stretch of the imagination and was a pretty long process. And so I'd love to just kind of hear you guys are still very fresh out of that and just had that all buttoned up. I'd love to hear how are things kind of right out of the gate now that the merger is complete. And you guys can
Absolutely.
start as high level as you want, and we'll kind of work down from there and get more granular as we go.
Well, Asher's the co-founder of US Bitcoin Corp and now Hut 8's president. So I'll let Asher kick off his from his POV and then I'll jump in.
There's a We're excited. There's a ton of work to do, ton of opportunity. And so for us, kind of how I'm thinking about it is historically on your US Bitcoin side, we've had the operations that we've run, right? On our side, roughly call it a little over 700 megawatts. And then with the Celsius transaction, about 1.1 gigawatts, and bringing the Hut 8 merger in together, about 1.2 gigawatts altogether, like so 1,200 megawatts, right? And so for us, kind of part one of the merger and where our team is spending a lot of time and focusing is Hut 8 has had some issues on their operations. I don't think that's a surprise. And like I think my goal as a executive is to just be open and honest with the street and with investors and just say these are the issues, these are what we're focusing on fixing, and to perform and to execute and to do what we're going to say we're going to do. And so with that said, I think our focus right now is really diving deep now that the merger finally is closed and we're 5 days in to really understanding the sites on the Hut 8 portfolio side historically, looking at the miners, looking at the facilities, and figuring out how do we maximize value. What do
Yes. Oh, sorry.
Right. What do we need to do on those sites? What machines do we have to change? Do we need to figure out the allocation of what machines go where? Right. A big part of our strategy
Yeah.
is now we have a ton of assets, almost 11 facilities across HPC and Bitcoin mining, and what assets go where to drive the most value. And a big part of our business is, again, we're trying to drive profitability. And so which sites can we start implementing energy trading strategies around implementing our software? So phase one is how do we make sure the full business post amalgamated is as efficient as our expectations for kind of the standard of operations that we have. The second is looking at growth opportunities and where are we heading and who do we want to be as we grow and where are we deploying time and capital. We have a lot of exciting things that we're working on and we'll continue to push forward on those and continue to push growth as we've done historically as a business, whether it be private or public.
Yeah, I think um just to echo what Asher said, like, remember, guys, US Bitcoin Corp, I don't know how many people know this, but they only raised 109 million bucks and were able to build a portfolio of north of 730 megawatts worth of assets. These guys were also the guys who stood up 1 exahash in 43 days, which is
Yeah.
literally unheard of. They're also
Yeah.
incredibly cost adverse. And so this is what that's one of the main strengths that they bring to the Hut 8 operation. It is no secret that obviously we've had a problem with Drumheller for almost a year. And so yeah, we're incredibly excited to have their operational expertise, their infrastructure expertise, their hunger to stand up and produce results is something that I'm really excited about. Obviously, in my seat, where I do all day is talk to investors in the market. And then I think just quickly to echo Asher's point about, like we are differentiated and why does that matter? I think from my seat and to every investor, I say, look, like you can get pure play exposure, or you can get a company like Hut in your portfolio that's pure play Bitcoin exposure, but also a call option on the growth of nascent and new businesses like managed services, which is an end-to-end site optimization business line that they have that is like does not exist right now, but does exist in other industries like CBRE, JLL.
Yep.
And also a call option on the growth of high performance computing, AI. There's a lot of upside here beyond just BTC proxy exposure. So that's what I'm pretty excited about. Anyhow, let's get into it.
Yeah, that's fantastic. And I mean, just some like mind bending numbers, like right out of the gate, too, right? 1.2 gigawatts in the total portfolio, 11 facilities now. Asher, I really loved the breakout of like phase one efficiency, phase two growth. Maybe let's kind of just stay in that phase one, go just a layer deeper here on like the efficiencies. Um, you know, and Sue, you kind of mentioned it with Drumheller. I would imagine that is maybe one of the areas that you guys are looking to sort of break open, get in there, roll up your sleeves and start to optimize. Maybe just talk a little bit more about like what are some of the things you guys are doing to get the efficiencies where you guys want to see them at. Let's just go a little deeper on that.
You're saying what are we doing exactly in order to increase efficiencies?
Yeah, so maybe just some examples, like you mentioned, taking a look at the fleet of Bitcoin
Sure.
miners and
Sure.
what in the fleet needs to be in what geographic location based on power, if that's a strategy, just,
Yeah.
things like that. Yeah.
Yeah, so Asher will talk super high level. Unfortunately, we haven't disclosed our fleet efficiency or exact power costs at that side yet, but Asher obviously can do a deep dive on.
Perfect.
Yeah.
So I think step one, which we've already done, right, is implement our software across all the facilities. We have proprietary built software both on miner management and also on energy trading. And so that has given us a full kind of bird's eye view into what's going on across all of the sites. Um, as Sue mentioned at Drumheller, I think there are operational issues and just macro kind of grid energy issues there, right? And again, historically, Hut has reported uptime figures, cost of mining Bitcoins, and so forth. And then I think at Medicine Hat, um, y- again, efficiency, uptime, et cetera, same thing. And then you have miners due to the old historic kind of Validus sites and those miners kind of sitting there. And so for us, it's okay. Where where do we move miners in boxes from North Bay, Drumheller, and Medicine Hat? What is the state of all of those miners? Which ones need to be repaired? What is the highest efficiency? And how do we move those around based on energy costs to maximize the most amount of profit? Also, one thing that we have done historically with the software that we built is trading electricity, right? So, is there an opportunity at these facilities to maximize off the energy grids and to make money off energy as well? We're a big believer that we're in the business of making money, and that means making Bitcoin, or that means making USD if USD you're making more at any given time, right? So, I'll give you an example. If our cost of energy is, I'm using Texas for example,
Hmm.
right? If we have a fixed PPA and our cost of energy is 2.2 cents, and we can mine Bitcoin and we can get, call it 10 cents or 12 cents of revenue, or we can sell power and we can get 50 cents. I'm going to sell power all day and not be mining Bitcoin during that period of
Yeah.
time because our profitability is going to be so much higher. Right. And so I think similarly here is within these sites, understanding the portfolio of assets and figuring out what is the strategy in operating these sites. Because how we operate is as we build or take over a new site, it's a twofold parallel path. One is how do we get the site to be as efficient as possible and as close to 100% as possible. So when we're running it at 100% of our desired hash rate. Then the next question is what is our energy trading strategy? So, for example, we have this concept that we're playing around with, which is there's some sites out there that is like a stranded wind farm or whatever. You really only
Hmm.
get to be online 30% of the time, but it could be really cheap power for 30%. So maybe for some of our super old miners, instead of retiring them, we just put them on that site and our desired uptime is 30%, but we're hitting 100% of our desired uptime, right? So part one is like hitting 100% of whatever our goal is. And part two is what is the energy strategy on that site and what is the best way to maximize profitability. Um, and with that, because of the software we built, we spent a lot of time creating the strategy around it, but then we build algorithms on every site to run that strategy. So it's not a person. And so we'll joke around here, but when
Yeah.
visited the hut sites when we were doing the merger, like, and this is all most mining companies, right? People are sitting by a computer looking at energy prices, deciding, hey, we're going to curtail now, we're not going to curtail now. Where our belief is to scale it and to manage quality, and to be able to basically trade in real time. It has to all be with algorithms, and so we basically build the strategy, build our algorithms around it, and let it automate. And then we tweak and we adjust as we look at kind of monthly performance. And so that's kind of the strategy around these proven assets. And look, the end result will be some of these sites are great for this reason, and these sites are great for X, Y, and Z reason. So I think
Yeah.
for us, it's making sure operations are kind of top tier, quarter percentile in the ecosystem, and then putting really robust strategies around it and figuring out how to maximize the value, right? And over time, sites change. Some sites become more competitive, some sites become less competitive, and it's not having any personal connection to anything and focusing on how do we just maximize profitability and continue to grow.
Yeah, I think Asher captured that really well. Agility is the name of the game for us as well in terms of capturing maximum profitability, and that's part of our strategic philosophy, right? Like how do we design our business so that we can be agile, we can capture upside, we can protect on the downside, because obviously this is a very volatile market, right? So I think Asher, yeah, highlighted that really well, but that's how we're moving forward.
Yeah, and I love that. It's, that combination of fleet optimization and power strategy. Um yeah, it is interesting to watch, and hear that the power strategy, and of course, my show is very heavily focused on the power side of this. But yeah, so it's great to hear that that is kind of the two-pronged approach to making sure the efficiencies gets up to where you guys need to see it. So Asher, you'd mentioned kind of that phase two. Well, actually, before we get into the phase two, when we look at that getting up to the efficiencies you want to see, one of the things I wanted to ask, is I was listening to all that again, 11 sites, 1.2 gigawatts of power that you guys are controlling. Do you guys have maybe even just rough ballpark timelines for when you can expect to start to get into that position?
Into which position growth?
Yeah, so being able to move from phase one into phase two, which is
I,
the growth.
I think it's a little bit in parallel, right? So
Okay.
we have a pretty robust team, almost 250 people now, as a post amalgamated company. So there's a lot of different people focusing on different areas. So both of them are happening in real time right now. It's not a if this then that. However, I think in my mind, from a priority perspective, you should only grow if you're doing what you're doing really well already, right? I think if you grow and you're not doing it well, you're only going to do it even worse at a bigger scale. And so that's why, from a
Yeah.
priority perspective, it's let's make sure that what we're doing really well, and we can scale from that. I think it's a typical VC model, which a bunch of venture capitalists say, if you start a company, you want to have penetration, you want to have like 90% penetration in one city rather than 10 penetration in 10 cities, because you can tell people like, hey, I can do this really well, and if I pour fuel on the fire, then I can grow that even better and I can get 90% in every other city. If you go and you say, hey, I'm only 10% in 10 cities, it's like, well, okay, do I give you more money to try to improve yourself? I don't know if you're going to be able to do it or not. So it's that same mindset, which is we have full-time people focused on our growth initiatives and where we're looking at kind of expanding our business. And then we have full-time people focused on the execution. But in my mind, like, the only way you grow is by executing, proving that you're deserving of capital from investors, and then being able to deliver on those promises and deliver results.
Perfect. Yeah. And so maybe we can start to kind of dive into like the growth part of this. And so I got a chance. You guys both just recently did a phenomenal interview with Will Foxley on the Mining Pod. And you guys did talk a little bit about the growth. And Sue, I'd love for you maybe to kind of touch on, I think it was either the Far North site, or it was a site where you guys have some bids out on, and
Mhm.
it's kind of all around like the energy portfolio. So could you maybe start there as far as growth, and then Asher maybe layer in a little bit more on the other things you guys are working on?
Yeah. So what happened was HUD 8, we had a third site in North Bay, Ontario. I think we built it up to about 30 megawatts. The site itself can go up to about 75, 100. And then we got involved in some litigation with the owner of that site. That owner ended up going bankrupt. And so all of his assets then ended up going up for bankruptcy. So there's 4 power plants in this total power portfolio. And Jamie, our CEO, she is very scrappy and likes to do things a little differently. And so, wanted to not only buy the site back, but effectively go after the entire portfolio. And so it's about 310 megawatts behind the fence in Ontario. And we're pretty excited about it because obviously the power market in Ontario is different than Alberta, and geographic diversity when it comes to having a power portfolio is super important and something that we do really
Yeah.
like about our business. So diversifying outside of Alberta into Ontario would be great. Power prices there on average are like 7 to 9 cents Canadian, which is pretty competitive.
Mhm.
Anyhow, so the process is we submitted our stalking horse bid. We actually find out today
Oh,
if there's anyone else who's bidding for these assets. So yeah, we'll hopefully find out within the next couple hours if we've got some competition. If we do have competition, we then end up going to court, and the court decides on December 14th. Or sorry, the court then does a process for uh, assessing the competition on the 14th, and then we find out who the winner is on around the 19th, 20th, 21st that week. And then ideally the assets would close, the portfolio, the deal would close sometime in January. So it's getting close. We're pretty pumped about it. And yeah, that's the update there with Validus.
wow. Um, so it brings up some questions for me because I think this is just such a cool. I honestly, and I think Sue, you guys would you be the first and only truly vertically integrated from like power generation through to the mining and data center side?
So on the data center side, yes, but Stronghold Digital does have, I believe it's a coal powered plant.
Mm,
But yeah, other than Stronghold, I don't believe there's any other publicly traded miner that has that full vertical integration. And Asher said this on an investor call the other day. You control your destiny when you control your costs.
uh-huh.
And I loved that line because I think that encapsulates exactly how we're looking at this potential bid.
I think in addition to that, not only will we have through that transaction, currently one of the sites that we own 50% of is a site called King Mountain. It's a 280 megawatt behind the meter wind farm. That's also like basically I think the first like behind the meter wind farm at that scale in North America.
Yeah.
And so I think what that is showing is we want to continue to set precedent of continuing to drive efficiencies and trying to be the lowest cost operator. And by doing so, it's continue to grow across the value chain through either doing it ourselves or through partnerships with the best in that industry, right? So our partners on that side are the best and the largest renewable company in the
Yeah.
US. And so we want to continue to do that across all areas of growth that we have.
Yeah. I mean, like you said, you control your own destiny. I I guess I'd be curious to hear your guys' take on this, and you can tell me if you want to answer this or not. But I'm surprised that there aren't other mining companies at least pursuing that type of opportunity, or maybe they are, and I just haven't heard about it. Do you guys have like an opinion on why maybe they're not, or maybe they are, and I just haven't seen it?
Asher, you can go first, and then I will piggyback.
You go first. We'll flip it around.
Yeah, so I think it's a couple different things. If you look at the universe of expertise of the executive teams across the public minor equity space,
Hmm.
it's great. There's a lot of brilliant, successful people running operations. That being said, there isn't really anyone who has Jamie, our CEO's background. So she comes from the data center, data infrastructure transformation mandate space. So she's like she's almost got a kink of like looking at a hairy asset that no one else wants to touch. She's the gal who effectively turns it around, gets it ready for sale, turns it into a multi-billion market cap opportunity. That's what she's done in the past for like the BlackBerries, the IBMs of the world, the Kojikos. So she really takes a different lens, and she's also I think has a different comfort profile when it comes to um, managing risk,
Hmm.
which is a good thing.
Hmm.
And then in terms of Asher and Mike, I mean, I'll let Asher tell his story, but him and Mike are just born entrepreneurs. These guys don't take no for an answer. I think Mike, the co-founder of US Bitcoin Corp, started building his first business when he was 8, and then sold his first business, I think, when he was 16 for like 6 or 7 figures. And then Asher finished university in 2 years, summa cum laude at the age of 19, scaled the largest education company in China. Like, these guys are drivers and
Hmm.
builders and visionaries. So I think the combination of all three is certainly very unique in this industry. I don't see it anywhere else. Not to knock our peers. Our peers are great, but I don't see this particular formula or this particular mix in play. And I think that that makes a big difference.
Yeah, and I think on my side, so success in a business like ours, I look at you have to be really good in a couple different ways. The first is ultimately we're an infrastructure company, right? We are a steel-toed boots,
Hmm.
Carhartt,
Yeah.
in the field, working infrastructure company. And so like I really believe and have adopted kind of the Sam Walton like Walmart kind of mentality, which is you have to be there and you have to be on the ground as you build the business and you have to understand your people and you have to really build that community. And I think if you're just making decisions from behind a desk around all of your operations, that's where you lose touch of how to really be the most efficient and be the best. And so I think that's first and foremost. I mean, when people join our company, we make them for the first 2 weeks, they don't get to start their job. They have to go and live on site. They have to work on
Yeah.
site, live on site, regardless of if they're starting in finance or corporate development or whatever. It's like, no, you work on site and you understand our business.
Yep.
We're actually implementing this new policy now as we're getting bigger, where every 6 months I want people to spend at least a week living on site again, because I don't want people to ever lose touch of who we are as a business. Because once you lose touch of that, you start to lose touch of where we can drive efficiencies and where we can push hard. So that's kind of part one is we built this business and look, like we had our 3-year anniversary. I mean, I think it's this week. Our 3-year anniversary for US Bitcoin is this week. In 3 years, we were able to get to the size we got to, right? With a very little amount of capital raised. And so we had a lot of return for the time and capital spent. Um, and I think the second part is the best ways to grow are to be opportunistic. Because if you are playing the same game as everybody else, you're just going to have to compete on spending more money and trying to get more sites, get more machines, and so forth. And so when I grew up, and I thought I was going to go into investing before I became an entrepreneur, but it was always kind of the Warren Buffett mindset of you have to be a contrarian, and you can be a contrarian wrong, and people might think you're crazy, but if you're a contrarian and you're right, that's how you succeed. And so when we look at these deals, some of these deals, especially like these more distressed bankruptcy like, right? And so we
Yeah.
were heavily involved in Compute North, Validus on the Hut 8 side, now Celsius, is they're complicated and they're hairy and there's a lot going on. And it's just not a simple cut and dry, but there's so much value there. And what I think is beautiful is like it's not just value that we create and generate for ourselves off the back of a bankruptcy. Like in the Celsius situation, I think there's value where we can drive value to our business, meanwhile driving value to the creditors as well. And when it's a win-win, that in my mind creates a lot of long-term relationships that you can do more and more business over a longer period of time.
Do you know what else I would say? Um, have you guys ever heard of the book? Ben, have you ever heard of the book Finite versus Infinite Games?
No, I have not, but I'm writing that
Okay, so
down.
Simon Sinek, he's an American entrepreneur. He's been doing a lot of videos on this book. So basically, the concept is in finite games, you have known players, fixed rules, and like an agreed upon objective, like baseball. And so if we look at that in the mining game, it's I think there's a lot of people, I think there's a lot of miners out there who are playing the finite game of I'm here to stand up infrastructure and I'm going to mine Bitcoin. That's it.
Yep.
I think what's different about Hut 8, and again, speak like what Asher, Mike, and Jamie all bring together to the table as the leaders of this company, is that they take an infinite game look at in terms of how they win in this industry. So in an infinite game, it's there's known and unknown players. There's changeable rules, and the whole objective is to keep the game in play. Versus in a finite game, there's a clearly defined endpoint and there are winner and losers. So I think that's what's really different about how we look at this space and how we look at succeeding beyond the next halving. And look, ultimately, we want to get to a point where, when you hear the word Tesla, you think electric vehicles. When you hear Kleenex, you think of freaking Kleenexes, like Xerox photocopiers, whatever.
Facial tissues. Yep.
Exactly. Yeah. Like we want to be like when you think of Hut, you think of energy, you think of infrastructure, you think of power, you think of scale. Like that's where we're going. And yeah, I'm just really excited I can
So,
finally talk
we've
normal.
never talked about this actually. Simon, great author. I mean, Start with Why, great book. I give it to actually a lot of people. I have a bunch of those copies, and also Leaders Eat Last.
Oh
So
no
yeah,
way.
man, if you take a look, Simon's a great author.
Yeah,
Oh,
I'm gonna start
all
doing more
right.
vlogs about infinite versus finite games because I think we're the infinite players. Anyhow, I
Well,
digress.
if okay with you, Ben, I want to riff off that a little bit,
Please.
right?
Yeah,
Um,
please.
so so in my mind, and I've had conversations with a couple different miners about this. I think there's this one school of thought, which is we're all competing. There's network difficulty. Everyone build as much as you can, as quickly as you can, and we're all competing
Yeah.
against each other, right? And then I think about the other side of that, which is there's a lot of players in the US. We're all within each other's backyard. We're looking at different sites. We're buying machines, etc. And then there's international players, right? There's people mining in South America. There's people mining in Russia. There's people mining in China. There's people mining in the Middle East. And so I actually don't see a lot of like the miners in the US as competition. Because I said, in my mind, I'm like, if we work together and we lower the cost of mining in the US and mining across the world at scale in an institutional way that's transparent because we're public companies or private, etc., like then we can all be really great because we can find bigger scale energy assets. I mean, for the amount of energy there is in the world versus Bitcoin mining, like it's a dot on the radar, right? And so, like,
Yeah.
okay, we're looking at this massive site. Let's get three people to come together and go build this together. And either you run your own sites on the site, or one person, ideally, Hut 8 does their managed services across everything. But like that's how I kind of think about the world, and I think it's contrarian, it's different, but like there's a couple companies where they have all their concentration in one site, right? It's like they have one really, really big site.
Yeah.
And then when that site is going well, it goes really, really well. But if there's a substation trip, a tornado that comes by, anything could happen in the world, right? And you have massive concentration risk. So if you have a certain amount of dollars, you have to deploy at scale because if you don't, you lose that kind of economies of scale, right? But if let's just say you had three miners, they were each building 300 megawatts each. Each one of them has concentration risk, geopolitical
Hmm.
concentration, weather concentration, natural disasters, force majeure, so forth. What if each one of them invested one third in each of the projects? Again, governance, management, all that is super important. And that's all kind of the details of every deal. But then each one has three sites. They still have 300 megawatts of exposure, but now they have diversification, regional power markets, and so forth. So to Sue's point, like, I don't really see this kind of rat race of everyone competes, everyone builds, we're all competing against each other. And that's why we build managed services and we build hosting. I think it's kind of like harmonious. People are like, oh, like why would people work with you if they're competing with you? I'm like, I mean, I don't see us as competitors. And like, if you work with us, we get cheaper prices across the board because now we
Yeah.
have a ton of scale and we pass that off to everyone else. And one of the partners we had in the Fahrenheit Consortium was like, you guys are doing like the Costco model. You're buying at scale and then you're basically distributing those savings to all of your members. And I'm like, yeah, that's right. And so I think continuing to kind of think outside the box and figuring out like ultimately our only goal is to drive return for our shareholders and to drive shareholder value. And whatever does that, I mean, that's what should win and should take precedence.
Absolutely. Absolutely. Oh, and Asher, I appreciate you riffing on that for a little bit too, because I love the different. I mean, you hear a lot of different opinions about the state of the industry, or you touched on a big one, which is like the concentration risk at some sites is pretty substantial. Just there, I mean, there's so many reasons that there's a lot of risk in having such gigantic sites like that. So, um, I would be remiss if I didn't bring you all the way back. You mentioned it for a second there, but how are things going with Celsius? What's going on there? Would love for a little bit of an update on Celsius, because that kind of fits into, how, again, how you guys are bringing value and adding value, and so please touch on that too.
Yeah, so for the folks that have kind of never heard me speak about the topic, quick kind of high level background. Celsius was a very large crypto company. They went bankrupt well, a year and a half ago, I want to say.
Yeah,
And it was one of the largest kind of bankruptcies, crypto bankruptcies that happened, right? Over $10 billion in claims and a bunch of kind of unfortunately destruction and loss in value and creditors who had kind of their money on the platform. They have a bunch of different buckets of assets, investments that they've made, loans that they've given out, and they invested almost $800 million into a mining business, right? Primarily in machines. And so when the process first started last year, the bankruptcy courts tried to go find a buyer. And I think like this is what we saw in the kind of crypto ecosystem was you had a bunch of these kind of bankruptcies happen. The reality is most people who believe in crypto put all their money into crypto. And
yeah,
so when the markets came down, you didn't have other people that had billions of dollars to go buy these assets because they were all in, right?
yeah,
And so you had this situation where it's like, okay, in a typical bankruptcy, you go and you take the assets and you go and sell the assets and someone takes over and runs with them. But here, the folks who would have done that don't have the capital to do so. And kind of this traditional distressed folks may not have like a long-term thesis on crypto. And like unfortunately, all of these assets have a correlation to crypto, right? And so we spent a lot of time thinking about it, working on it for a couple months, and then there was a stalking horse bid that was made, and we kind of looked at that structure and we said that's a really interesting structure. Let's give back as much crypto as we can to creditors, and then and as much liquid assets as we can. And then let's take the liquid assets, which was primarily the operating business, was like the mining business. And then
yeah,
you had kind of these other kind of tangential businesses, like they had a bunch of Ethereum, they had loan books and things of that nature. And I was like, okay, let's go. We believe we have what it takes because we're like one of the only ones with scale of this size that operates these megawatts to be able to take over like they have about 122,000 machines, so that's what roughly 400 megawatts of like machines, right?
wow,
So
yeah,
like they like we can come in and we can really make impact, right? When we took over some of the compute north assets, I mean, we were managing like 87 megawatts and we went from 87 megawatts to like 500 megawatts in 60 days, right? And all of those are now hashing in the like a high 90 percentile efficiency. So like we had confidence that we've done it before and we can prove that we could do it again, and that could give confidence to the folks making the decision. And so we kind of put together a bid and said it was us and four other members. We formed this consortium called Fahrenheit, and we said we'll come and build kind of the next gen crypto company that's compliant. We'll take this thing out of bankruptcy and we'll run this business and we'll create equity value for the creditors that otherwise would have illiquid assets. And if you liquidate them in like a fire sale, you're not going to get much value for them. So let's go create real value. Um, we went through kind of the whole bankruptcy process for, I mean, the better part of this year. The bankruptcy courts approved it, and the next day the SEC kind of came out and said, "Look, we like we're just not comfortable with anything but Bitcoin mining. We don't know where these assets came from. We're
mm,
not comfortable with staking and so forth, right?" And so there was a pivot that had to be made. We had a lot of conversations with our Fahrenheit team and with the creditors and the debtors, and ultimately said, okay, the new business needs to be a Bitcoin mining focused and sole business, not e-staking, not loan books. All those have to kind of go away and like stay with the estate. And we have to focus
sure,
on building a Bitcoin mining business. And so that's kind of where the last couple of weeks are. There was a court filing, I believe, a week or a week and a half ago, and basically, HUD 8 now is kind of leading that deal. Right on the court docket, it still says U.S. Bitcoin because it was kind of pre-merger,
yep,
but now HUD 8 is basically sponsoring the deal, and we have another court hearing later this month, and the goal is we build a Bitcoin company where they have roughly call it 300 plus megawatts of infrastructure, 400 megawatts of miners, and they're incorporating the company with a couple hundred million in cash. So a really good company. We'll be the partner, service operator, and we're excited. We're really excited for that. And so I think this is one of those examples where I think it's a great business opportunity for our business, and we can continue to increase our scale. And I think we can really do some good in the world, right? We can really create value for creditors. We can
yeah,
kind of and like crypto as an ecosystem has to do well if we want our mining business to do well, right? And so if we can take a bad situation and ideally bring some good to it and create some value, I think it becomes a win-win. And that's why we spend so much time on it and really think we can drive value in that process.
Yeah, so I really appreciate the update, Asher. And just to keep a tab on the time, because we're running a tight ship on a Friday afternoon. You guys were gracious enough to kind of carve out some time for me on a Friday afternoon. I want to just kind of wrap up with, you guys giving a landing place for the audience. You guys are going to be continuing to roll out more information, kind of as you're done with the merger and Celsius. So, guys, please point the audience where you want them to go so that they can keep up to date on all the big stuff you're working on.
Yeah. So I mean, obviously hut8.io, hut8.com. Hut8.com is mostly our mining landing page. You can certainly get updates there. I am at Big Suey on Twitter. I definitely will frequently update you guys. Asher, I don't know your handle. Asher's also on Twitter.
Just first and last name, Asher Genoot.
So yeah, and my DMs are open. Happy to take questions anytime, and also happy to be back on.
Awesome. This was an absolute pleasure to have you back. Both. Wow. Let me try that again. It's an absolute pleasure to have you both back on. Such exciting stuff. Congratulations again, guys, for getting the merger across the finish line. This big news, and you guys have a good rest of the day and a good weekend.
Thanks so much. Bye, everyone.
Appreciate it. Thank you.